Hi, hello friends. Welcome to the class that is secondary market, the part of financial market class. Today we are going to discuss about the secondary market. Secondary market, as we know, is otherwise called the stock market or stock exchange. It is the second components of the capital market segment, that is secondary market. First segment is primary market, deals with the new issue securities, whereas the capital markets, secondary markets, deals with the existing securities. In primary market, we have seen and we have discussed that there is a buying of securities only. There is an interaction between the business organization or the corporate houses and the public investors, banks, financial institutions. So there is only the securities are purchased by the investors, invest money in the securities, and business houses or the business organization issues the securities to the public. They are selling and investors are buying. There is no selling of securities by the investors. They invest only. They could not sell it. They could not realize their gains. They could not get their return on the investment. Only they have to wait till the company declares the dividend. So this is primary market. So to remove that difficulties, the secondary market is the second components of the capital market. So that is a secondary market which deals with the existing securities. It does not deal with the new issues or the new shares securities. The companies which are issued the new securities, those securities are called existing or the old securities. Those securities are buying and selling takes place. That means those who have invested in the primary market, they are now left the market by selling the securities, and the new investors comes into existence by the purchase of the securities. So this is called secondary market. Secondary market is the place where the investors interact among themselves. Two investors are interacting themselves. One is buying and the other one is selling the securities. It is a place where the buyers and sellers meet together to exchange the different securities at the particular price at which both the buyers and sellers are agree. So this is secondary market or the stock market, or commonly it is called stock exchange. So if you come to the meaning or the definition of the stock exchange is the place, it is a fixed place where the brokers are doing mediation between the two investors, the buyers and sellers. The brokers interact between the buyers who want to buy the securities and also exchange it with the sellers, the other investors who want to sell the securities. As per Securities Contract Regulation Act, the stock exchange may be defined as an institutions or the body of individuals or the organizations constituted for the purpose of assisting, regulating or controlling the business buying and selling of securities. So as per Securities Contract Regulation Act, that is 1956 amended later on, that is in the year 2018. As per this Securities Contract Regulation Act, stock exchange is an institution or body of individuals which are involved in assisting, regulating and controlling the business of buying and selling of existing securities. So that is the definition of the stock exchange. So in India, if you go through the stock exchange details, there are at present 23 stock exchanges are there. There are 23 stock exchanges, of which 2 are national stock exchanges. So 21 are regional stock exchanges. As you know that in Odisha there is a regional stock exchanges in Bhubaneswar. So likewise there are regional stock exchanges and 2 are national level stock exchanges. So there are 23 stock markets or the stock exchange in India are operated at present. So this is the statistics till that 2019 ends. So let's comes to discuss the features of the stock exchange or the stock markets. The first feature is market for the securities. The stock exchange create the marketplace for the existing securities. Securities means the preference shares, equity shares, commonly the common shares, the common stock, that is equity shares, preference shares, debentures, bonds, etc. So this is the market for those securities. Then second feature is it deals with the second hand securities. As I told you, that is the meaning, that is the sell and buying of existing securities, stock exchange. So this stock exchange, the feature is it deals with the second hand securities, not the new securities. The securities which is already issued by the companies, now those securities are purchased and sold between the investors. So that is the deals with the second hand securities. Then third is the stock exchange or the stock market features is it regulates the trading in securities. It regulates means it controls, it assists, it helps to the investors in buying and selling of securities. That it is regulated. Then next fourth feature says deals in registered securities only. That means there is only dealing with the registered securities. The companies which are registered with the stock market or the stock exchange, those companies' securities are available for market of the securities. That means buying and selling purposes. The other companies, unlisted companies securities are not available. Only listed companies means registered companies, those who are registered with the stock market. So that is deals with the registered securities. Then fifth feature says it operates in the legal framework. There is a legal framework under which the stock exchange or the stock market is operates. So legal framework means as per the SEBI guidelines. That is the Securities Exchange Board of India guidelines. The secondary stock exchange or the stock market operates. That means all the rules and regulations given by the Security Exchange Board of India are followed by the stock exchange or the stock market, and they protect to the investors, they helps to the investors, they award the investors before entering into the stock market operations. Then lastly, it is a measuring device. The measuring device means it measures the price of securities. It measures, it determines the price of securities through demand and supply of securities. So that is the measuring device. That's why the stock exchange is called the measuring device. Different shares prices are to be displayed on the board, or it is also transparent in the transactions. Transparency is there. They display the different prices of the securities. How? That is the interaction between the buyers who demand the securities, the sellers who supply the securities. The two investors meet together, just like of the vegetables or the commodities market, where the buyers and sellers meet together and exchange the goods and services for the particular price. The price is determined instantly there. So likewise, in the stock market, the securities prices are determined when the buyers ready to purchase the prices, the particular securities or the shares, and the sellers ready to transfer the securities at the particular price, and there is an agreement. So this agreement contract is called the stock agreement of the stock contract, and this determines the prices of the securities. It is a measuring device. So these are the various features of the stock markets or the stock exchange. Let's come their functions. What are their activities? The work of the stock market or the stock exchange. What are their functions? The first functions of the stock market is it provides easy liquidity, easy marketability to the existing securities. Liquidity, that means your investment done in the shares will be easily converted into the cash immediately. So for example, today I had purchased 100 shares of the Reliance Industries and at rupees 2,100, suppose say, and today I had sold at rupees 2,150. So that is easy liquidity is there. Today I had invested, today I had got the cash, convertibility into the cash. From the investment, from the securities, it is to be converted. So that is the easy liquidity is there, easy marketability. Marketability means it is a good market, it is a good place where you can exchange your securities for the different prices. So that is the marketability is there. That is only for the existing securities, not for the new issue securities. The new issue securities are not available in the stock exchange. Already I told you in the beginning. So the stock exchange or the stock market deals with the second-hand securities or the old securities which are already issued by the business houses or the business corporations. These securities are available for the trading in the stock exchange or the stock market. So those securities are marketability available. So this is the first functions. Then the second functions is pricing of securities. That means the price of the securities to be determined. As already told you in the pictures, there is a measuring device. Stock exchange is the measuring device. Here, both the buyers and the sellers, both are investors. So in the primary market, only the buying of securities takes place. No selling, no transfer, no exchange. So investor could not realize their money. They have to wait till the securities are listed in the stock exchange or the stock markets. So here the investors who has already invested in the securities, now they want to sell those securities. Those securities are to be sold to the buyer. They have to identify the buyers. They are also investors. So when buyers and sellers meet together, they determine the price of the securities. The price is determined. There is a pre-determination of the prices. There is a three-factor power play interactions of the demand and supply factors. How much demand for the particular company shares and what is the supply of the particular company shares. Accordingly, the prices will be determined. If supply is less, demand is more for the particular company shares, then the prices goes up. When the supply is more, the demand is less for the particular company shares, then certainly the prices falls down. So the price of the security is to be determined. So that is the second functions. So that is the performed by the stock exchange or the stock market, like your vegetables or the commodities market, where the buyers and sellers meet together and decides the price. So next issue, it is the safety of transactions. That means only the listed securities are to be listed. Companies, securities. are available for the buying and selling. So there is a safety of your transactions. Means whatever you have invested money in the particular company or the shares, that company is a listed companies, it is a registered companies under the Companies Act as well as Securities Exchange Board of India rules and regulations. So that companies are which are registered their securities, those securities are available for the buying and selling for the transactions. So there is the safety of the transactions is there, 100% safe and transparent. There is no hiding, nothing, no misleading information is there. Everything is correct and accurate. Then fourth function is that stock market is the economic barometers. That means it is the pulse of your economic growth. As your stock market expands, stock market develops, stock market grows, your economic growth is encourages. Your economic growth expands. Your economic growth shows the positive directions. That means the contributions of the stock exchange or the stock market leads to your increase of your GDP, the gross domestic product of the economy. That determines the economic barometers, means the measurement of your economic growth, because the stock market is nothing but it is the channelization of your savings, investment and the capital formations, capital creations. As much as the stock market grows, develops, your economic market economy expands, market economy develops. So that is the economic barometers. Then fifth function is there is a spreading of equity cult. Equity cult means there is the awareness, create awareness, more and more awareness among the investors, among the public to come forward to invest in the equities, take the advantages of equity investment. So that is through the stock exchange or the stock markets. People are generally not interested to invest money in the securities, because with the fear that there is a more risk. No doubt more risk is there, but more return is also there. High returns, more risk, more return, it is associated. If there is no risk at all, then certainly that return will be less. You cannot get the more returns from the organizations. So that is the thing. So this leads to the spreading of equity cult. Equity cult advantages is there. So this equity cult create awareness among the minds of the public, minds of the investors to invest in the equities or the different securities. Then scope for speculation. Speculation is just like of your gambling. It is a one type of gambling. That means taking the chance, opportunities, throwing of the money into the speculations. Not so much of speculation, it is a speculation is there. So there may be rise in the price, there may be fall in the price. Today, for example, today you had purchased the price of Tata Steel company's 10 shares at 350 rupees. You had expected the prices will goes to the 370 rupees and you will sell it with a 20 rupees profit for sales. But the prices falls down. So this speculation is there. Little bit speculation is there. You have to take the chance of that speculations. With the expectations, you will invest and get the returns. Then if it increases, then certainly there is a lot of benefit for you. If it decreases, 350 rupees you will purchase Tata Steel. If it decreases to 340 rupees, you will stop there and sell it. 10 rupees loss you will occur. So that speculation may be there. Or with the keeping in mind view that today you will not sell it, if it falls down, tomorrow you will wait that prices may increases. If it decreases, you will sell it, stop this loss further and invest in some other security, divert to other securities. Because there is a speculation will be chance. You have to take the chance of that game. Then lastly, that stock market also create the capital allocation. Capital allocation means it channelize your savings. Channelize the savings into investment. from households. So this is capital allocation is there. Where the capital is allocated, capital goes to the business. Business does not pay any money. Some investors sells the securities, some investors buy the securities. So there is a channelization of your savings. Idle money which you are kept in your pocket or in your locker or in your almirah, in your home, self custody, that is the idle money. This idle money you are put into the investment in the form of securities by buying and selling of the securities, and this money goes to the other investor who sells the securities. You had invested, you had to wait for 2 days, 3 days, then after you sell it, your money come back again to your pockets. So this is a channelization of your savings into investment, from investment to the capital allocations. Then stock market economic growth is there, barometers expands the business, shows the stock markets growth, showing off your capitalization of the economy. That India is a developing economy because our stock market is not growing as much as we are expected. If you compare with the foreign countries markets like New York Stock Exchange with the Bombay Stock Exchange, there is a lot of differences. If you compare with the Japanese Stock Exchange with your national stock exchange, there is also a lot of difference. There is a lot of people are investing, putting that investment in the securities advantages, that is taking the equity calls. But Indian people are orthodox investors. They are traditional investors. They don't want to take the risk. They are not adventurous customer investors. So adventurous take the advantages, opportunities, growth, and invest money in the different securities. Certainly you will get a lot of benefits from the stock markets. See this, there is 23 at present, 23 stock exchange in India is there. Out of 23 stock markets, there are 2 national stock exchange. NS means national stock exchange, national levels. There is no fixed place. You can buy, sell anywhere in India. There is a transparent, there is a spreading of the transactions, pricing, safety of the transactions is also there. And out of 23, 2 are national stock exchange, the rest 21 are regional stock exchange, that is at the regional levels. Like examples, Calcutta Stock Exchange, Madras Stock Exchange, Ahmedabad Stock Exchange, Vadodara Stock Exchange, Coimbatore Stock Exchange, your Bhubaneswar Stock Exchange, that is in Orissa. So these are the various examples of the regional stock exchange. Delhi Stock Exchange, these are the regional levels. So you out of the regional stock, Bombay Stock Exchange, it is also one of the national level stock exchange. Everybody knows about it. So this are the stock markets where you have to take the advantages of it. Next comes to the trading procedures of the stock market. How you will buy and sell. Trading procedures means there is the buying and selling. How you will buy? How to buy and sell the securities. So that is the trading procedures. For the trading, for buying and selling of securities, we need first selection of a broker. Selection of a broker. That is the broker is the persons who is doing just mediation between the 2 investors. So there is the one investor is the buyer, another investor is the seller. Broker is just a middleman, where the investors are registered their names for the trading of securities. That means buying and selling of securities. If, for example, if I want to buy and sell the securities of the different companies, then first I have to select a broker where I have to register my account, my name. You have to register your name as a buyer or the seller or the investors for the trading of the securities, means buying and selling both. Then you have to choose a broker. That broker is the mediator of the securities. He is the participants. Broker is the participant. He is a participant. That broker may be an institutions, may be individuals, may be banks, or maybe mutual fund solutions. For example, State Bank of India is a broker, is doing the broking services. You can take the help of the State Bank of India. You can take the help of that individuals. So many brokers are there. That angel brookings, that Kirby stock brookings, that is the different institutions are also there. So many brokers are, individual brokers are also registered their names in the different stock markets. So that is, they are the participants of the stock exchange or the stock market, who are the permitted members, registered members dealing with the different securities of the various companies. So you have to select a broker. Select a broker means you have to choose a broker under whom you will do the trading of your securities, means buying and selling of securities. So after choosing the broker, then you have to open your demat account. Demat account is your dematerialization account. So that is, the demat account is necessary for the trading of securities, for buying and selling of securities. So it is the demat account. This account is to be connected with your savings account, where the cash is available. It is connected with the savings account. From the savings account, cash goes to the demat account. From demat account, you will, with the help of the demat account, you will buy and sell the securities. So there is the opening of demat account under the broker. For the opening of demat account, you have to give your details, fill up the applications, you have to give the proof of the identities like PAN numbers, Aadhaar numbers, or the ID proofs about the bank account details of the savings account for the connection services. So that is the opening of demat account. Then after the demat account is to be opened, then you will placing the order. That is the securities. For placing the order of the securities, that how much shares you want to buy or how much shares you want to sell, you have to place the order to the broker. That the broker under which your account has been opened, you have to place the order that I want to execute this much of number of shares for the buying, or I want to execute this number of shares at the particular price today for the executing for the sales purposes. That is the placing of order. After you place the order, then your order is to be executed by the broker. The broker will send you the contract note for your executions of your transactions. That means whatever you had ordered, that means suppose 100 shares of Tata Steel, you have given the order. So take 100 shares of the Tata Steel, you have given at rupees 355 per shares. That is per share. You have given the order. So today at 11 AM you have given the order for the purchase of 100 shares at 355 per shares. So your broker will execute the order. That means your order has been executed and he will send a contract note. That means 100 shares has been purchased with the 355 per share plus brokerage charges, brokerage commission. They will charge their own commission, own fees, and they will execute the contract note to you for the purchase or sales of this particular company's shares. So after executions, then the settlement is to be done. Settlement, how settlement means payment for the transactions. That means payment for the buying of transactions, receiving the cash for the sales of transactions, sale of securities. For buying of securities, you will pay it. For the sale of securities, you will receive the cash. How it is to be settled? So there are two settlement ways are there. One is your spot settlement, another is your forward settlement. Forward settlement is the future settlement. Spot settlement is the immediate settlement. That means Same day you had purchased, same day you want to settle it. Today you had purchased, today you want to sell it. So that is the spot settlement, that is takes place in transaction plus 2 days. Transaction plus 2 days means, for example, if you purchase Monday, your settlement will be cleared by Wednesday. That means 2 days transactions. Monday plus Tuesday. So Wednesday your transaction is to be clear. That means purchase, your payment will be done by Monday. That is completed. That likewise, if it is a forward transaction, means future transaction carry forward for the future, that may take place T plus 5 or T plus 7. T plus 5 means transaction plus 5 days or transaction plus 7 days. That means a week may take place. Monday you had purchased, by next week Monday or Friday your settlement will be done. So that is the forward transactions. So this is the settlement of your transactions. Now comes that how we do the transactions, purchase and buying of selling. Then who purchase, who sells. So investors just give the order to the broker. Broker is doing everything. So broker is the participants. There are two national level depository services are there. That is the depository services. That is NSDL and CBSL. NSDL means National Securities Depositories Limited and CTSL means Central Depository Services Limited. These are the two national level depository services who are registering all the participants, all the brokers are registered under their services. They are holding all companies' securities for the stock market transactions. That means all the stock market transactions are under the holdings of National Securities Depository Limited or Central Depository Services Limited in the online transactions form. So that is the depository services who provide the service to the participants, means broker. Broker registered their name under the NSDL or the CDSL. They are controlled by the NSDL CDSL services and they purchase and sell, execute the transactions on behalf of their client, that is the investors. That is the who want to buy or who want to sell the securities. So this is the depository services under whose the brokers are registered their name and under the brokers are the participant, depository participant. They are the depository participants under whom the clients, the investors register their name and open the demat account and they place the order, then execute the order, then settlement transaction takes place. This is the present system of buying and selling of securities in the stock market. So in earlier times, in the old times, that means after 2003. So this is after 2003. This online transaction takes place. Before 2003, there is a offline transactions, no online transactions. There is a physical form of buying of and selling of securities takes place. Physical form means at the time there is no depository services, only stock exchange, stock market was there, where there is a buyer, brokers are there registered, they are the registered members. The platform, the floor under which the auction, the brokers shouted with the prices and the securities names and the prices, the other brokers are buying and some brokers are selling. So there is just like an auction takes place. So in that auction, the physical form of transactions takes place, means physical form of delivery of shares and share certificates are issued by the companies, stock markets, etc. But this physical form takes a lot of fraudulent practices, misleading practices. There may be fake transactions. The broker may give you the fake prices and accordingly they buy the shares and securities and take the advantages, and you are the loser for that securities. So certainly the physical form of transaction does not help you lot. So this online transaction is more transparent, more clear, more safety and more healthy, as well as less speculation point of transactions. Hope you have understood the secondary market transactions. So the next we will discuss about the practical procedures for the transactions market. Thank you.